Welcome to Edison TV. I'm Catherine Thompson, Technology Analyst at Edison, and I'm here today with Matt Lamont, CEO of DUG Technology. DUG is an ASX-listed provider of seismic data processing services and software, mainly to the oil and gas industry. The company is headquartered in Perth, Australia, and to serve its global base of customers, has offices in London, Houston, Kuala Lumpur and Abu Dhabi. Welcome, Matt.
Thank you, Catherine. Yeah. It's good to be here.
Yeah. To kick off, could you give us a brief introduction to the business?
Yeah, so we are mostly in the oil and gas, although we've got as many clients outside of oil and gas, we just don't make that much money from them. And we do seismic processing and imaging services, and we sell software. And we also do some technology spin-offs, which is around licensing some royalty around immersion cooling and edge computing solution.
And in terms of the revenue split, you're able to give us a rough idea of where you make most of the money?
Yeah, most of the money comes from services. So I think it's probably 85% roughly from services, and then software is a good whack at 10% maybe, or something like that, 12%, and then the rest comes from other things.
Okay. And in your core business, you've pioneered the use of elastic multi-parameter full waveform inversion imaging.
Well done.
So for the layperson, could you explain what that is and what the significance is for the business?
Yes, so it's normally in seismic processing, you just take the primary energy. So if you're standing at a canyon and you go cooee, that first bounce back is what traditionally we use as signal. And that means that all those echoes that you hear and all the jumbled other wave-guided modes and stuff that you hear is all noise. So traditional processing imaging spends 6 to 12 months removing that noise, and then they go on to imaging that primary. What we're doing is using a big long wave equation that has all the noise in it for the imaging, and therefore you don't have to clean up all the noise, and we can turn it into a massive inversion problem, so a big problem on a very big computer. So you're transferring man time and calendar time for big computer time. So you can turn things around better. And because you've got a lot more signal, you get better images.
And ultimately that's used to help oil and gas companies figure out where they should be drilling.
Yes. Yeah. It's to help geologists and geophysicists understand the subsurface. So we produce like a numerical cube of Earth, which you then turn into lithology and fluid predictions.
Okay. And how do you think you're currently positioned in the market, and how do you think this technology might help you move your market share forward?
I think the timing for that question is really good because we've just been to the big European conference last week. And so we're always interested because that's where we would expect our competitors to roll out their new technology. And we believe we're over 2 years ahead of our competitors in this technology. SLB now have multi-parameter, and we can look exactly where they are and put that into our timeline, and that has them about 2.25 years behind. Viridian don't have anything multi-parameter yet that we can see, and apparently it's not on the horizon, so we're in really good shape there. We think that we can significantly grow our market share on the back of this technology advantage, and we are doing that. The Middle East office is a case in point that's going flying, and it's all about multi-parameter FWI.
Great. You've developed a few new products and services out of experience you've gained through doing high-performance computing. Could you, two examples, DUG Cool and DUG Nomad. Could you talk us through the DUG Cool technology and how you expect to monetize that?
Yeah, so DUG Cool, so for over 10 years, well over 10 years, we've been immersing all of our computers into it's actually a liquid plastic is probably the best description, an oil, synthetic oil. And what that does is it means that we don't have any refrigerated cooling, and the machines are a lot more stable. So we save virtually all of the cooling and also all those noisy fans we don't have. So that saves us about 51% of the power bill. And the machines are a lot more stable because they don't have any hot spots or dust or corrosion or anything else. So to monetize that, we've gone out and sought a very large partner in BAC. What BAC until now built all the outside equipment. So they build like over 95% of the cooling towers for all purposes, whether it's buildings, data centers, industrial in America, and they build more than 50% of the cooling towers worldwide. What this does, it allows them to move in to inside the data center with a product, and it marries perfectly. And I would suggest to listeners, if they're interested, to look up DUG Cobalt, BAC Cobalt, I think is what they called it, and it's very interesting. So that's how, and then we get a royalty on all their sales. And that's a massive company, 500 partners and so forth worldwide. On Nomad is an edge solution, so it's a supercomputer in a container, so 10, 20, 40 foot. And again, the difference between that and others is it's got immersion cooling in it. And immersion cooling works really well in a container, whereas air cooled doesn't work very well. And that's just simply because of the size of the container and the space you need around an air cooled rack is just not there. So we're really excited by that. And yes, we just made the first sale, which was great. And that's actually going up to Malaysia, that first sale. But we're looking at a great pipeline there, and we think it's going to get rocking and rolling soon.
And in the core part of your business, you do a lot of high performance computing. As the business grows there, and particularly if your newest technology is more adopted than the older, that's going to need more assets. How do you balance investing in those high performance computing assets?
So we buy machines just in time. So we don't buy them if we don't need them. So it's one of the difficult questions or difficult things for investors to get their head around is our capital outlay, because we say, well, we might be buying computers if things go well and we grow and we need them. So we buy them just in time. We make sure the data center is ready. So the data center is all ready to take more compute. And as we grow, we will need more compute, but we've still got capacity at the moment with what we've got. And we just asset finance them.
Okay. And you have some level of visibility when you sign a contract that, to make that investment.
Yes, we buy them just in time. So we get the contract. We need more machines. And so we go and buy more machines and put it in. It's a little more difficult because you need compute really quickly with multi-parameter FWI. So you've got to be a little out in front, but not much. We can see it incoming. We don't take chances. We don't put machines in and leave them idle.
Okay. And finally, what milestones should an investor look out for to see your progress?
I think there's a couple. I think, starting to see a flow on of deals around DUG Nomad would be great to see. Starting to see deals come through from BAC. They've been at it not a year yet, but the data center is a long lead time sort of stuff. And the order book. Just we publish the order book every quarter, and so you can just see what the business is doing by the order book in services and software. I'd be watching software because software is going super well. We've got a fantastic woman running it, and it's going to go really well.
Great. Okay. Well, thanks for coming in. And I just wanted to say that we've just initiated coverage of DUG. And if you want to see a kind of a more detailed video produced by the company on how MPFWI works, there's a link to that in our report.
Thanks, everybody. Thanks for your interest.